All right, thank you so much. Serena Dyer, I'm live in Shanghai and markets in China, probably bracing for losses on Friday following that big decline in U.S. and European markets. But as Serena said, they have had recent gains. And to further focus on that, we're joined by Anthony Chan, Managing Director and Chief Economist for JPMorgan's Chase Private Client. Good to have you. Welcome to the show.
Glad to be here.
So the Shanghai Composite Index up 7.5% over the past month. What are the reasons behind these recent gains?
I think it's very clear that even though China is going through this delicate transition as it moves away from the manufacturing sector more towards the service and more focused on consumption instead of exports, we are in fact seeing a government that really doesn't want to see the economy slow down too much. For that reason, the People's Bank of China, the central bank, has been easing monetary conditions. We are starting to see quite a number of stimulus programs. So we're seeing growth that is probably going to be not too distant away from the growth target of 7.5%. And as people start to see that the probability of a so-called hard landing becomes smaller and smaller, the equity market and, of course, optimism with regard to the Chinese economy starts to rise a bit.
And Anthony, which sectors in particular are seeing the most gains right now, and which ones do you think have the best outlook for future gains?
Well, again, here what you have to do is to look at what the government is doing to try to support or prop up some of the sectors. You've certainly seen that in many of the cities, the government is removing a lot of the restrictions to buy homes. Obviously, you don't want housing purchases to be speculative, but in this attempt to make sure that the housing market is supported, we are going to support, to some extent, healthy house purchases and a little bit of speculative. So the property sector is doing better. To the extent that they're adding more liquidity, that also supports
Anthony,
the banking sector.
Sorry to interrupt you. The property sector had been a big concern for investors. There's been a lot of worry that China's real estate market was overheating and that now is overcooling. How is that not being viewed a problem area now, and why are stocks in that sector doing well? Are these concerns dismissed?
No, remember what I just said. These are the areas that the government is supporting. Of course, the housing market seemed to be overheating a bit, but of course, in recent months, much of the goals of the government to make sure that the bubble or the air out of the bubble was taken out. Now the government is a little worried that maybe they took too much air out of the bubble, or to some extent that sector is too weak and it's going to hold down economic growth. So what are you seeing? You're seeing that the restrictions and in fact are coming off, and that they're encouraging house purchases again, as long as they're not too stimulative. You're starting to see that. To the extent that you add more liquidity, that's also supporting the banking sectors. And by the way, when you look at the equity market, which are the sectors that are recovering? It's the housing market and the banking industry. No coincidence.
How strong can this recovery be, Anthony? Well-known investor Mark Mobius, chairman of Templeton Emerging Markets Group, projecting a further gain of 20%. And he thinks it's sustainable because of the incredible amount of money available for the market. Do you concur? Is there money available in this market? Can we see a 20% upshot?
Well, these numbers are going to be thrown around. I certainly think that the recovery is possible, and you're going to see gains, further gains from here. 20% seems like a big number, but we are going to see the equity market continuing to make progress, because I think it's very clear that the government wants to make sure that the economy is well supported. Li Keqiang has said many times that making the goal of 7.5% growth is something the government is serious about. And even though we think that China will do just fine if the economy grows somewhere between 7 and 7.25%, and in fact, in the next couple of years, we're going to see that targeted growth rate coming down. It's not that long ago when China was growing at 14%, and now we're all excited about 7.5%. I have some exciting news to say, and that is that over the next 10 years, we will see that the targeted growth rate is going to come down. But again, China is a much bigger economy. When it was growing at 14%, it wasn't generating as much extra output as it's doing today when the economy is growing much less.
But Anthony, the IMF warning about China's growth, saying that they should set the economic target more along the lines of 6.5%, 7%, and also saying that major economic overhauls are needed. Which economic policies do you think should be changed as a top priority?
I think it's very important that they move to control credit growth to some extent. We've seen total social finance in the latest month surging again as the government wants to help the overall economy. But as you look out to a longer period of time over the next several years, the Chinese government is doing the right thing. They're trying to take away some of that speculation, to make sure that you get some healthy credit growth, and that a lot of that speculative type of credit, which really doesn't do a country very good, is in fact reduced. And as long as you move in that direction, and as long as you start to shift the economy towards a consumption-based economy, as soon as you start to increase perhaps the safety net to reduce the savings rate and allow more consumer spending, the Chinese economy is going to be better off. Remember that anytime you look at economies over time, economies that are manufacturing based, over time they become more consumption based as they mature. China is going to be no exception.
All right. We'll definitely be watching all of this very closely. Markets in China opening in about half an hour. Thank you so much, Anthony Chan, Managing Director and Chief Economist for JPMorgan's Chase Private Client. And